Standing ovation. Thank you so much for joining us.
I much prefer it when we are leaving than when we're coming.
Yeah,
so you have your marching orders. Thank you so much for joining us for the first panel of the last day. We are talking about financial inclusion and digital payments and economic growth. So this is going to be quite a distance that we are romping through in 30 minutes. But it really is a pleasure to be joined. Christopher Luxon, Prime Minister of New Zealand.
Pleasure.
IMF Director, Kristalina Georgieva, and Gianfranco, Ferrari. Pleasure to have you also. Financial inclusion. We were just talking really about how it's been redefined over the past decade. We've seen tremendous progress in access to banking. The World Bank says 76% of people have access to banks. But as we know, that spectrum of informal and formal banking has radically changed, particularly with the pandemic, which of course with access to mobile technology, internet, cheaper mobiles and so on, has really transformed what it is and the access and the type of access that people get. So we'll be covering all of that and a little bit more today. But just to start off and to sort of lay the groundwork here, Chris, perhaps you can talk about what role investment and financial access plays in driving economic growth in the Asia-Pacific.
Yeah, look, I mean, firstly, kia ora, good morning, everybody. It's great to be with you, and thank you for being here today. Look, I think investment is critical to all economies, and if I look at a country like New Zealand, if I look at our domestic firms, our top 10% are actually 7 times more productive than our bottom 10% of firms. And a lot of that is their adoption of technology in particular. But also then when you look at globally frontiered firms, those that are truly on a global scale, they're even more productive. And so we need that investment, certainly for accessing pools of capital, particularly as we see hundreds of millions of people lifted out of poverty. They're now saving for their superannuation, for their pension, for their retirement. Those funds need homes to be invested in. But importantly, it's about pools of capital, but also it's about knowledge transfer. And when you've often seen large, globally frontiered, multinational companies making investments in, in a country, it actually lifts the productivity of those domestic firms that are planted around them as well. So, either way you look at it, investment's great. We want to see continued flows of investment in all countries, in all markets, because of the knowledge transfer and because of the capital that comes with it.
So talking about that transfer of capital, the transfer of knowledge, and the role it plays in financial inclusion. I mean, Kristalina, can you lay that in a geopolitical context? We are living in a world of increasing financial fracturing, geo-economic fracturing. What role does financial inclusion, digital payments play in that kind of shifting universe?
Well, we need to start from the fact that financial inclusion is very local. And when we think about the developments over the last years, especially since COVID, that put digital on steroids, we're seeing tremendous increase in access of people to digital payments, and even now more to credit based on their digital presence. What is very important to recognize is that while progress has been remarkable everywhere, there are countries that are doing better than others. For example, you gave the number, 76% globally have now access to financial services. What it translates into people having wealth, protecting themselves against shocks, and the economy becoming more productive because those who would have otherwise been idle now can contribute. They can be entrepreneurs, they can engage. But this 76% is an average behind which there is huge disparity. My professor of statistics used to say about averages, you put your head in the refrigerator, your feet in the oven, your temperature is average, but you are dead. And the reason I'm stressing this is because we have countries like Chile, where 85% of people have access to digital finance. Here in Peru, tremendous progress over the last year. It was a year ago, 53%. Now it is 63 or more, so there is a big jump, but it is not Chile. And then you go to Africa, and you have countries where less than 50% of people have access to financial services of any kind. And then comes your question. What happens in a world that is more fragmented? Well, first, there is a genuine danger that payment systems would develop separate from each other, and they will not talk to each other. So we have to even more focus on standardization and interoperability. Institutions like the International Monetary Fund, this is our mission, to help our members have an economy that is more vibrant because it is more connected. The second risk is that we would see even more division and divergence in the world, because access to opportunities in a more integrated world economy, all other things are equal, are better. And so we have to be mindful about those risks. And at the same time, I remain very optimistic. I think that if before COVID we used to say the future is digital, with COVID the future has arrived.
Yes.
And the speed of transformation will continue to surprise us. My appeal to policymakers, especially here in APEC, is concentrate on interoperability and standardization, and think about the value access to finance provides for growth and well-being of communities and people.
And just getting beyond that 76%, as you say, into that granularity, I mean, Credicorp is Peru's largest bank, a legacy bank, and one of the largest banks in Latin America. I have to say, fairly surprised coming here and seeing that Yape, my colleagues pull out their phones and use it for absolutely everything. It does seem to be ubiquitous. So I want to ask you, what are the most important lessons that you've learned in the sort of initiative of rolling out Yape, and what are the lessons for other Asia-Pacific economies, particularly developing economies?
Yeah. Well, first of all, a pleasure having all of you here today as a Peruvian. I feel very proud of having such an extraordinary audience here. Yeah, Yape is a digital wallet which we launched 7 years ago, actually. As I was telling you before, it was the first endeavor we launched without having a business plan. So that's lesson number one. We started with a vision of launching basically a P2P application. It has evolved to becoming a super app. Today, 69 of adult Peruvians use Yape. That's almost 16 million Peruvians. We have provided access for the first time in their lives to over 5 million Peruvians, and close to 3 million Peruvians has access to a loan in the financial system, in the formal financial system. Lessons learned, quite a few. We've made a lot of mistakes down the road too. But maybe the most important one, may sound obvious, is that there's no way of having a successful financial inclusion plan with a thorough and comprehensive financial education plan. There's a very high correlation between being underbanked or unbanked and the base of the pyramid and lack of education. So otherwise it's not sustainable. And banking products are not the simplest products in the world, right? So unless you develop the right products with a comprehensive financial program, it's not going to work, it's not going to be sustainable. That's lesson number one. The second lesson is, since the very beginning, since Peru is a very heavy cash economy, since the very beginning, we decided our competitor was going to be cash. Not the other banks, not the other digital wallets. And there are three reasons behind that. One is cash is expensive for the economy. Yes. Number two is extremely expensive for banks. And number three, when there are cash transactions, they don't generate any data. And if you want to provide access to the unbanked or underbanked, which again is highly correlated to the informality, you need data to build risk models, models in general. So those were the three reasons. And the third lesson is be patient and willing to pivot. Yape almost failed 2 or 3 times because we didn't target the right market. And in the end, it is what it is today.
One thing you mentioned to me is that through Yape, you've redefined or rethought what the spectrum is between formal and informal banking.
Yep.
And it seems that technology, and particularly, as Kristalina was saying, driven by change through the pandemic, has shifted our thinking, even of the notion of what financial inclusion actually is. What landmark should we be striving for? Can you tell us a little bit about what brought you to that place, how it was you came to that decision?
But I do believe that we have a paradigm of talking about formal and informal economy as if it were black and white, where there are tons of shades of gray along that black and white. Our experience has been that, at least in payments, people really don't care about taxes, which was a paradigm for us before. So as far as you provide them with a payment mechanism that generates less friction than cash, they're going to use it. So if I'm a mom and pop store and I sell more, I collect more easily, and so on, I'd rather go to the digital alternative than using cash, even though it may generate some information for tax purposes. Yep.
Chris, I don't know if you agree. Do people care about taxes?
Well, I think they should care about their taxes. I certainly now care about their taxes. But look, I mean, I think that's right about the point about the application of technology. I was just reflecting as you were talking, for New Zealand in the 90s, we had an early adoption of what we called FPOS, or ATMs. In fact, we're probably world leaders in adopting technology like that. And as a result, that was very good for New Zealanders and for financial inclusion in general. But I think you're right around technology. That is the way forward in terms of being able to bring more people into the system, but obviously to participate in the economy in the way that we want to. I do feel there's a huge opportunity in an APEC world order for us to think very precisely about the protocols. We're working quite hard to try and speed up the payment process, for example, from government payments to small and medium enterprises or providers or suppliers or procurement of services that we use in New Zealand. And we're trying to make that and speed that up to a matter of days so that we can get the cash into those bank accounts, those small, medium enterprises faster, which obviously helps them. But again, the global protocols around all of that enable e-banking and e-invoicing is actually something that collectively we should be working on in bodies like APEC, for example, to get that standardized across the countries and across the globe. And that's where I think there's still a lot of opportunity for us to work collectively together on an agenda like that. You know, open banking, we talk a lot about. We have a slightly different problem now in New Zealand as a developed economy. It's about how do we get more competition into our banking sector. Open banking promises a lot, but actually very few countries have actually been able to deliver that easily. And that's certainly very much of our focus is more fintech application, more technology, more adoption of open banking. How do we make those policies work? E-invoicing, all of those things are very important going forward.
Just touch on some of those challenges, open banking being one of them. I mean, Kristalina, where do you see the biggest challenges when it comes to financial inclusion, particularly in Asia Pacific?
Well, the biggest challenge is how to reach people that are in this last mile, the most difficult to reach. Whether it is because geographically they are in remote areas and they work within a community, they don't so much reach out beyond this community, where it is culturally, because they think that there is a way of financial inclusion that is based on the traditional banking rather than digital banking. And we have to recognize that this reaching, going the last mile is hugely significant. I'm thinking of Chris's neighborhood, the Pacific Islands.
Yes.
When the rest of the world is moving towards more inclusion, because of corresponding banking problems, they're actually moving backwards in terms of access to financial services. So making that clear priority to reach out in a way that solves problems that are not quite yet solved. To me, this is number one. Why is it number one? Because as long as we let parts of society out, we are depriving ourselves from their contribution to the economy, but we are also creating potentially pushback, creating social unacceptance of something that is actually good for society.
And Gianfranco, can you talk about how do we get there? With Yape, getting to that last mile. I mean, one extraordinary thing is when you open a Yape account, you also get a bank account.
Yep.
So it has transformed access.
And I totally agree that as of today, even in Peru, there are still buckets of population that there's high correlation between the elder, people living in rural areas, women, and so on. So now we're doing specific initiatives in order to target those segments so as to keep including, financially including those segments. So I do believe that we all, again, going back to the shades of gray, but now digital and physical. It's not that you're digital or physical. Your people move, move along digital and physical. So we have a phygital strategy, and by reaching those, the last mile, we've leveraged a lot on our physical capability, physical distribution capabilities. Going forward, I would say that there are like two steps to overcome. One is cultural and reaching these buckets of population, and the other one is technology and connectivity. So that's where the private sector, not only banks or digital wallets, but also telcos, and the public sector, we should work together so as to reach those buckets of population.
And if I could just add, there is one very important a task for everybody, and it is to prevent fragmentation that comes from selecting different technological solutions, different systems, but not investing into building the bridges and the tunnels that connect these systems. And this is where APEC and fora like this are so important because they allow to think about the common interest and prevent that fragmentation from happening.
And maybe just to complement that, you mentioned it before, interoperability is key. Again, if cash is your competitor, you rather join forces and compete against cash rather than competing against each other.
There's an argument to be made, though, that those bridges, those tunnels, are perhaps not resilient enough through all the shocks. You've called it sort of the prone shock world that we're living in, for example. How do you assess the ability to withstand that fragmentation with the kind of infrastructure that we have now on financial inclusion?
But what we have seen is a recognition that this is a task to be tackled. We see institutions like BIS, the Bank for International Settlement, they're concentrating a lot on identifying ways in which different experiences can be connected. You have institutions like mine, the International Monetary Fund. We are a transmission line of experience from one place to another. And I can tell you that our members really are keen to see us helping to prevent that kind of friction in the world of finance. And where is the common interest? The common interest is financial stability. Because if we don't build and maintain these bridges and tunnels, then we do risk that there could be an event for which we are not prepared that leads to dramatic consequences. And I think leaders everywhere are mindful that, yes, there is competition among economies, yes, different solutions tend to say we are the best, But the global awareness, especially in a world of artificial intelligence, of the necessity to have guardrails, but also to have connectivity, that awareness is there. And I am, again, I'm an optimist. I believe in common sense. And I think that here in this meeting, we would see people like Chris, who is exemplifying common sense to dominate the conversation.
I think Kristalina's right. I think, pre-COVID, we moved from a world of efficiency to one now of resilience. And in that process, in many ways, with 195 countries in the world, the danger is that each country goes off and does its own thing, dealing with its own needs in the confines of its own jurisdiction. And I think there is a real opportunity now, post-COVID, for us to come together through the global forum, like APEC, the work of the IMF, WTO, others, to actually get the operating system in place that actually does allow a much more frictionless financial system. In the Pacific Islands, we see a lot of debanking happening, for example, where banks are withdrawing from the Pacific Islands. And that is in part because of onerous legislation. It's about complicated AML. Now, we need sensible, smart, good regulation always. But some of those things are creating the friction that Kristalina would talk about. In a banking sector like New Zealand, we need a lot more competition, open banking. But it is practical things now, like e-invoicing protocols that need to get sorted between countries. It's those sorts of things that we need to, I think, redouble our efforts and actually paint a picture of what we want to achieve together over the next 10 years to actually get that infrastructure, financial infrastructure and operating system in place that actually would support more financial inclusion around the world. So I think now post-COVID is the time for us to come together and actually say, yes, I know that people are thinking resilience over efficiency, but actually that is not an excuse for us not to engage on these issues and to think about how we can change them.
The world, though, arguably, it's never been harder, over the last couple of decades to achieve that kind of frictionless system in the financial world. And so I wonder what you see as the biggest challenges to getting there and the biggest challenges and how we overcome the geo-economic fragmentation. We have seen conflicts. We, of course, have President-elect Donald Trump coming in talking about potential for universal tariffs. It looks like the world is becoming more fragmented, not less. So how do countries like New Zealand operate in that context? What are the challenges that you're dealing with?
Yeah, look, I think there's no doubt about it. It's a more geostrategic, competitively challenged world, without doubt. But having said all of that, I still remain an incredible optimist about the future and where we can go as a world together. I do think we need to redouble our efforts and come together to actually reinforce the international rules-based system. If you're a country like New Zealand, a small country of 5 million people that relies on international trade, a quarter of our jobs come from trade, our exporting firms pay higher wages and salaries as a consequence of that. We're very invested in making sure we have a rules-based system, not a power-based system. And there has been a shift from rules to power, and that's something we advocate very strongly for, that irrespective of your size, we want countries to be able to navigate their way in the world through the international rules-based order. So I think we've got to keep calling out those values that we hold to, finding like-minded partners and countries all around the world that think similarly, and working together on those challenges that we have. Trade will continue in the world. That horse has bolted, as I said before, earlier off stage, and now those flows of trade are inevitable. And so good operators, good business people, good traders will find ways to do business with each other around the world. But I think there's a real need for us to we're going from rules to power. We don't want that. That's not good, because all of our economies have done exceptionally well in the last 70 years off the back of a rules-based system. So why would we want to go backwards on that? We have had a focus on global efficiency, and now everyone's moved to resiliency. We need to make sure that that isn't code for acting independently and not in a joined-up fashion. So I think we've just got to keep advocating for those values that we've all benefited so strongly from over the last 70 years.
Just on that note, as we round out the panel, I want to think a little bit more about the future. You've already sort of taken us there. But for Credicorp, digital innovation in the financial payment sector, what is the key driving force that you see changing this industry over the next 5 to 10 years?
Yeah. Yesterday we had a very interesting panel talking about AI. And what struck me the most is that a lot of the words or terms that were used at that panel are, we've been using them across this panel. So I do believe that even though the digital journey or the digital transformations in the financial sector were not done yet, AI is the next big thing, or the current rather than the next big thing going forward. We were talking before, I would say that one of the key success factors for Yape has been its simplicity. But as we add features, that simplicity is we're leaving simplicity and becoming more complex. By leveraging on AI, we will end up being that your Yape, each of us will have a different experience based on our preferences. That would enable us, or any digital wallet, to actually come to the most unsophisticated potential client with the right personal offer. So I'm very positive on what AI could mean for the financial sector and specifically for financial inclusion.
And as we finish off now, I'm going to ask all of you the same question, which is, what is your one recommendation to leaders at APEC for this sector, for digital payments, for expanding financial inclusion?
In 2 words, lean forward. The world is changing very rapidly. In this particular area, it is so obvious that policymakers need to think ahead and then come up with solutions that are prudent but not suffocating innovation. And that requires, above everything else, to have discussions, debates, engagements that could allow that we lean forward in a better future.
Gianfranco?
2 words. And coming from a private sector, it's profitable.
Yeah.
So it's not that we're doing this for as a matter of philanthropy or whatever. It's actually how to enlarge the pie, how to, obviously it takes time. It takes more patience, as I mentioned before, but it's profitable. So it's not a matter of being the Mother Teresa of Calcutta or whatever. There's a business there.
And we were just talking, Gianfranco was explaining to me that Yape means come on.
Yeah.
So I was just thinking, as you were saying, lean forward, I was thinking Yape vamos, which is what Gianfranco was talking about. Chris, I'll give you the final word here. Your one recommendation to APEC leaders.
Oh, look, I think for APEC leaders, it's about reinforcing the international rules-based system. Because when we have security and stability in the world, we also get economic prosperity. The two are inextricably linked. And so you can't have one without the other. And I think for all of us, it's a good wake-up call post-COVID now to think about a new world that we want to imagine. And that requires us very strongly to think about the rules-based order, what needs to be invented, reinvented, adapted, adopted, changed. Let's have the courage to do that and make it relevant for our people. And ultimately, you know, as a new politician, it's all about what you deliver for your people. You know, they want us to try, they want us to improve their daily lives, and we've got to be able to do that working together, I think, around the world. So reinforce the international rules-based system so that we can actually have prosperity and also security.
Thank you so much, Kristalina.
Excellent. Excellent.
Gianfranco, that was truly a sprint around the world. Geopolitics, financial friction, fragmentation, solutions, opportunities. Thank you so much for running that marathon with me. It's really a pleasure to be joined by all 3 of you. Thank you very much.
Thank you. Great job.